Hi everyone, Ricardo Gonçalves here from the SBS newsroom with this special stream of On the Money interest rates decision live. Over the next 10 minutes, we will take you the decision from the interest rates on this federal budget day. It could be a big one and it could be also an unprecedented move. Because this is a live stream, we are allowing you to ask questions of our guests who are joining me live. Julia Lee from Berman Invest and Warren Hogan, economist at EQ Economics. Thank you very much, guys, for joining me. Julia, maybe if I start with you, what's the market expecting the Reserve Bank to do today?
Well, the market's priced in a cut down to 0.1% by November. Look, the expectation is that there is a small chance we might see the Reserve Bank move today, but the higher probability is that we will see the move outside of the federal budget day. So we are expecting to see that move in November. A lot of it, though, is, I guess, a big question mark in terms of how effective cutting rates once again will be, given that we are seeing rates already at 0.5%, and we have seen the Reserve Bank also supporting financial institutions through the term facility, where it's been supporting our rates at 0.25%, so providing low rates to financial institutions to keep the credit lines going through the COVID-19 crisis. So look, the Aussie share market in and out of positive territory today. We're up about 0.1%, but of course the market trying to second guess what might be in the budget tonight as well.
Okay, Julia, I'll get you to stay on the line, but I'll take you out of the discussion and get to you after the Reserve Bank decision to see what the market has done. Warren, in the meantime, a few weeks ago, we heard about this Team Australia moment from Bill Evans saying that the RBA may cut official interest rates on the same day as the federal budget, and we hear about all this fiscal stimulus, right? He then stepped back from that, saying November. What do you think will happen today?
Oh, look, I don't think a cut today really does much. I mean, the big story is the budget. We're going to see a deficit of around 10 to 12% of GDP, which is huge amounts of stimulus. So you're talking about 15 basis points of reduction to what is already, a virtual zero interest rate. So I think they're going to sit pat. I'm still not convinced they're going to go in November. I think really monetary policy is easy, and it's not about the price of money. The price of money is near zero from the wholesale markets, and really it's about making sure the supply of money is there. And so I think they should just wait until early next year and see how the banking system goes post the moratorium ending, and seeing what sort of distressed assets they've got and whether there's loans and businesses that have been foreclosed, etc. So I think what little powder they've got left, i.e. 15 basis points, leave that for another day.
Will a rate cut, will that actually make a difference?
No, it won't. I mean, we've actually seen this rate now at 0.25% for almost 6 months. And just in the last month, we're seeing mortgage rates come down and other rates come down. So really, it's not so much about what the RBA is doing. It's about what's going on in the actual real economy, what the rates are that people borrow at, what businesses borrow at. And I think just being steady and making it clear, as they have, that interest rates are going to remain where they are for years, 3, if not 5 years at near zero, is a more effective way of financial institutions, banks and other lenders being able to lower their rates to their customers. And that's what we're seeing happening. So I don't see there's any sort of real value in a 15 basis point cut today, except for maybe taking a bit of pressure off the currency, but even that's going to be very marginal.
Okay, we've got the news from the Reserve Bank. The Reserve Bank has decided to keep interest rates on hold. It's saying that the board has decided to maintain the current policy settings, including the cut targets for cash rate, the yield on 3-year Australian government bonds, and the parameters for the expanded term facility. What we'll do now, Warren, is I'll get you to come off screen so you can take a look at that statement. So what normally happens is that when the decision comes from the Reserve Bank, it normally releases a full-page statement on why it decided to do with interest rates. As I said, the Reserve Bank holding official interest rates at 0.25%. The statement's about 10 paragraphs long, which is why I'm giving Warren Hogan a few moments to take a look at the statement. But I'll read you the final paragraph in that time because that's where it summarises its decision. So what the RBA said is that the board is committed to do what it can to support jobs, incomes and businesses in Australia. Its actions, including last month's decision to expand the term funding facility, are keeping funding costs low and assisting with the supply of credit. The board views addressing the high rate of unemployment as an important national priority. It will maintain highly accommodative policy settings as long as it is required and will not increase the cash rate target until progress is being made until full employment, and it is confident that inflation will sustainably be within the 2 to 3% target band, which it's said for quite a while. And the board continues to consider how additional monetary easing could support jobs as the economy opens up further. So that's the breaking news coming from the Reserve Bank, holding official interest rates at 0.25%. Let's go to Julia Lee now to see if there's been any immediate reaction from the share market. Julia, how's the markets being taken and how the equity markets in both currencies?
Well, Ricardo, we've seen the Aussie share market ticking higher. That might come as a surprise to most investors, but that's purely because one of the biggest sectors on our market is massively impacted by interest rates, and that's the banking space. We have seen the banks improving on the back of that interest rate decision. Look, banks don't like it when interest rates go lower because it makes it harder for them to grow profit on their loan books because people tend to keep their mortgage payments the same, even though they should be paying lower on a monthly basis. So look, the banks have improved after that interest rate decision, and that means the market has improved as well. So the market moving from being flat to up by 0.2%.
Warren, I might get you now up on screen too. Hopefully you've had a bit of time to take a look at that statement. I haven't really seen anything except that last paragraph. Why did the Reserve Bank not cut?
Well, look, I just don't think there's any impetus to it. And just quickly looking at the body of the statement, they did actually mention that they're expecting unemployment to peak at a lower level than previously thought. So that's an improvement in their view on the economy and not really the sort of thing that triggers an easing at this stage. But to that last paragraph, what's in there that's really important is they're going to keep rate. They're not going to increase rates was the comment. And what that's telling you is they're not thinking about reducing rates. I mean, this whole debate around cuts from 0.25% actually goes against what the RBA said, which is they're already at zero. They have a 25 basis point operating corridor in their dealings with the banking system and money market, and they're going to maintain that. So I actually think the market's going to rule out November on this.
Does it mean that it wants the government to do more work, and that's what we'll see from the budget?
They mention a substantial amount of fiscal stimulus in the economy, and no one can avoid the leaks, and there will be a lot coming tonight. So it's exactly the point, and the Treasurer himself has been talking about this for the past week, is that it's not that monetary policy can't do anything. It is doing something. It is super stimulatory. And so really now, with interest rates at zero, the next wave of action from a policy perspective is fiscal policy. The RBA is not at neutral. It is not restrictive. It is helping. It just can't do any more because it's at zero, and at this stage has no interest in taking rates negative. And they also talk about how the bond market is functioning well and how the public sector is funding itself, they're getting their bonds away. And that's important because I think really the next major monetary policy action, and let's hope they don't need to do it, is if the government can't easily finance its budget deficits through issuing bonds. And that's when they come in and do QE. That's the next big thing. And at the moment, there's no sign of any need of that. So it's really steady as she goes for the RBA. And I think we need to get used to this. We're not going to see much from them for probably 3 years.
So in saying that then, so what's the RBA's role in the economy right now then?
Their main role is to address the volume of credit, of the volume of liquidity that's in the system. So we've been trained for the last 30 years or even longer to think about the price, that is the interest rate. And that's now at zero. So really the focus is to make sure there's enough access to credit in the broader economy, which for the RBA means making sure the money markets, the bond market, and the banking system has all the liquidity they need. And that's what the term funding facility that Julia mentioned is all about. And look, they may need to do something on that after the bank moratorium ends in January if the banks start to get any trouble with loan losses and this sort of thing. But really, it's all about quantity now and not price. And that's a very different ballgame for the financial markets, and particularly market economists who've sort of spent their careers, like I once did, talking about the price of credit.
Julia, just before I let you go, the market's had 5 minutes to digest the news. Any moves?
Well, the big move has really been in the Aussie dollar. Before the decision, we were seeing the Aussie dollar at 71.9 US cents. We've seen it now above 72 US cents, so trading at 72.1 US cents. And I guess this sends a signal to the market that perhaps the RBA and the government are hand in hand. We heard the RBA statement talking about supporting the Australian economy and jobs. And look, the government has said that they're looking at temporary, proportionate measures to keep the unemployment rate lower, and they're looking at a rate below 6%. So I guess for any investors or homeowners out there, you can probably expect interest rates to remain where they are or even lower until we see that unemployment rate below 6%.
Julia, I really appreciate your time on the money. Thank you very much. Warren, I'll just ask you one final question, because we do have that federal budget later tonight. What do you think will be the key points to come out from the budget?
Look, it's going to be an optimistic budget. It's going to have a huge amount of stimulus and just an absolutely vast array of measures. The key for me, though, in terms of how the economy is going to go in the next year, is can they fill the gap that's going to be left by the removal of JobKeeper? Will the tax cuts, will the other policy measures they put in place be able to make sure the economy maintains a recovery path in 2021? So I think from an economic performance and economic outlook point of view, that really is the key. And that's the tax cuts. That's going to be incentives for businesses to invest. It's going to be government spending, infrastructure, this sort of thing. Is it going to be enough? Now, we're not going to know for a few months yet, but the strategy to make sure that the post-JobKeeper economy remains on track for recovery is key to me.
Okay. Warren Hogan from EQ Economics, thank you very much for your analysis. Really appreciate it. Thank you.
Thanks, Ricardo.
And thank you for joining me on the money, this stream from SBS News. I had some comments from viewers, especially one of my old colleagues, Brooke Cordy. Thank you for the words of encouragement. They're saying love this. We'll have a full wrap on SBS World News tonight at 6:30, and a budget special on the late edition of SBS World News at 10:30. I hope you can join me then.